Hey guys, Ivan is here, and today I'd like to talk to you about the Toronto and the GTA real estate markets and what happened specifically in the month of May. The Bank of Canada raised the interest rates by 0.5% on June 1st. They of course announced it in May, which caused a new wave of anticipation and a further market cool down overall in the GTA and the Toronto, skewing the market towards more balanced territory and in favor of the buyers. As a result, the sales have dropped both on a month-to-month basis and on an annual basis as well. Coupled with the decrease of sales, the active listings actually went up 26% on a year-over-year basis, creating more supply on the market and a more pleasant buying experience for the buyers out there. Overall, the listings take longer to sell. They stay on the market for longer, while new listings make their way on the market, creating more supply of inventory and, of course, happier buyers. With things like higher interest rates, rising inflation, supply chain disruptions, geopolitical issues, and other factors, some might think that we might be headed into a market crash. However, there are other factors that are propping up the Toronto and the GTA real estate markets. According to the Toronto Real Estate Board President, David Krieger, we are currently experiencing extremely low unemployment rates, higher job vacancies, rising wages, as well as a record immigration that is renewed after COVID. So it looks like that these factors will create more demand on the market and will not let the market crash. The average sale price in the Toronto and the GTA was just under $1,213,000, which is a growth of 9.4% year over year, which signals that this is still a strong market. However, that the growth rate is slowing down and it's growing at a more manageable pace. Overall, the prices have dropped 3.3% across all asset types. However, the prices are more noticeable outside of the city of Toronto, with places like Oakville dropping in price by 11.6%, Orangeville dropping by 8%, and Oshawa dropping by 10%. Now, with the low unemployment rates, rising incomes, and the immigration getting back on track from its pre-pandemic levels, the demand in the GTA and Toronto real estate markets is still pretty strong, with condos and the detached houses are leading the pack in terms of desirability. The average price for a detached home across the GTA is $1,433,000, which is up 7.8% since last year, but it's down 6.1% since April. As people are coming back to the offices and to downtown core in general, condos are becoming a hot commodity again. And it's evident because the price for condo apartments across the GTA and Toronto combined is just under $800,000, which is a 10% increase since last year, although it's a 3.4% decrease since April. So what does it all mean for the buyers, the sellers, and where are we headed for the rest of the year? So for the buyers, it means that we're most likely going to continue seeing a more fair and balanced market, with properties staying on the market for longer, less bidding wars, and more inventory to choose from. And of course, the buyers will have a little bit more leverage to negotiate with the sellers, which is a privilege that we are not used to in the GTA and the Toronto real estate markets. For the sellers, it doesn't mean that all hope is gone. In fact, the market is still quite strong. The demand is still there. It only means that the marketing will take an essential role in promoting your listing. So aside from things like HDR photography, video walkthroughs, drone shots, Google, social media ads, pricing strategy is really important in this case. So doing a proper market analysis and a price analysis for your listing is essential in this market. And also another thing, the sellers should be prepared to stay on the market for a little bit longer. So if the sellers before, even a year ago, could sell their properties within 7 days, this